One of my favorite investment models is called fractional ownership. Fractional ownership, it's kind of in the name. You're basically owning some sort of asset. Sometimes it's a business, sometimes it's an asset, sometimes it's just like an idea. You can even own part of like a patent or an idea or a trademark or something. The idea is that you want to have fractional ownership of something that produces cash flow. For me personally, the best thing to buy is assets. So I find assets that produce some sort of cash flow. So for example, let's say I know that if an exotic car is being rented for a day, it's probably being rented for somewhere between $1,200 to maybe $2,000 per day. And I know there are cars that are less expensive than that and some that are way more expensive than that. But generally speaking, you could find a lot of exotic cars that are being rented out between those two figures. If I know that this is happening, now my job is to think, okay, so is this an investment that I want to operate personally? Do I want to go out there and set up a car rental business and buy all these cars and hire staff and cleaners and mechanics and all these different things in order to rent out exotic cars? Or maybe there's somebody in my network that knows how to do this. Maybe there's somebody that's really good at doing exactly this, and I can just tap into what they're already doing. For me personally, fractional ownership is not owning the entire asset and doing it myself. Fractional ownership is me buying maybe even just part of this asset and using that to generate some sort of cash flow. In this specific example, when it's a small asset like this, when it's a car, or maybe sometimes it's another small asset that you can afford on your own, sometimes like rental houses, if it's like $100,000 that you have to put as the down payment, or maybe $50,000, a lot of times it's worth it to just own the asset on your own instead of trying to bring in investors on something small like that. Now, if we're talking about an asset that's 10, 20, $50 million, at that point, you know, it may make sense to bring in investors. But then again, you have to think about, okay, now I have to manage investors. Now I have to make sure that I'm doing all these extra things. So it just brings a lot of different new dynamics to the situation that didn't exist before. And so if you're able to find a way to invest on your own, it may make sense to own the whole rental car, for example. But what I want you to know is that it still is sort of fractional ownership, because you have a business that's operating, right? It's a car rental business. And if you buy one car and you place it within that business, well, now the business technically has that car in its fleet. So the business increased in value. So you have, at least to some degree, some sort of fractional ownership in this whole operation. Now, you may not actually own equity of the business. Don't get me wrong here. I'm not saying that by buying one exotic car, you own a percentage of the business, but out of that entire operation of everything that's happening in that specific scenario, you are a fractional owner. And so that removes you from all the responsibility of operating the exotic car business. You bought the car, you maybe put $20, $30, maybe $40,000 down, and now they're renting it for you for maybe $1,500 a day. And of course, we look at their averages for the month on how many days is it usually rented, maybe 10 to 15 days that it's being rented. So we're making a pretty nice amount every single month. And so they take their cut, it's usually some sort of profit split for them operating it for you. That allows you to get into the game with very, very low startup costs. You do a profit split with them, and the rest you keep for yourself. So you make your car payment out of that, and the rest is just pure cash flow. So that's a super simple fractional ownership model that we use in my program to generate multiple 6 and 7 figures for my clients. And they're able to secure these vehicles and then use them as rental vehicles and get paid for doing that. Kind of becomes a win-win situation. Everybody's winning in that scenario. Everybody's making money, and everybody kind of has like fractional ownership. So you're almost like partnering with these companies that are renting out exotic cars. So if you wanted to own your own business, you could, but really the easier setup here is just using a company that's already in existence and having fractional ownership. Now, another example of fractional ownership is oil wells. Now, I know it's not a very traditional investment, but I do know multiple people that operate oil wells in several different states actually. Now, basically, the way that it works is you're owning a percentage of this oil well, which is producing a certain amount of barrels of oil every day. So you can buy an oil well, and of course they range in price. So let's say you only had $50,000 to invest or $10,000 to invest. You could literally buy a small percentage of this oil well, and every single thing that happens with that oil well, every dollar that is made, obviously after expenses, you are entitled to a certain percentage. And so the way that these companies are doing it, they have investors that come in, they fund the majority of the well, and then the rest of it is owned by the company. So for example, you're buying a percentage stake of the well, and they need to raise a certain amount of capital to get it all dug and drilled and prepared. But one thing to keep in mind is that they're managing it all for you. While they do retain a percentage of it, they're gonna be managing it for you. They're gonna be doing all the drilling, all the work, and even selling the oil for you, so that when you have enough barrels pumped out, they're able to sell that to companies, to refineries, to wherever it needs to go in order to generate a profit for you. Because obviously just having a bunch of crude oil, you can't really pay. I mean, I guess technically they could pay you in barrels of crude oil, but I'm sure most of you would much rather have a direct deposit come in on the 1st or the 15th of the month, every single month, just consistent cash flow on cash flow on cash flow. So that's fractional ownership right there. You don't have to own the entire well in order to make money. You just have to own a little bit of a fraction, right? You don't even have to own 1%. You could own 0.2%. Right? So 1/5 of a percent, that's a fractional ownership right there. It's true fractional ownership. It's actually a very small fraction. But that also doesn't mean that you can't own 50% of the well. So if you own 50% of the well or 60% of the well, you could own the majority of the well, but it's still fractional ownership because you're not the sole owner. And now that's another example that I know many of my students have been taking advantage of. However, one more example that I want to talk about is multifamily real estate. That's a very, very common asset to use with fractional ownership, because my students are able to get into a fractional ownership opportunity like that. They own part of a multifamily building, maybe 40 units, 50 units, 60 units, however many it is, and they're all renting out. And so we have somebody managing the property for us. They're renting out this property, whatever it is, apartment building, right? Usually like a 30, 40 unit would be like an apartment building. And so it's being rented out. We have tenants in there, whether it's office space or residential, it's being rented out. And we're gathering all of this rent money every single month. So after our expenses are paid, we're still generating some sort of income for ourselves and for our investors. And all investors really want is consistent cash flow, because if you're, let's say, at a stage in your life where you just have a big lump sum of money and you need to do something with it, well, you don't want to put it somewhere where it's not going to do anything, because that means that you still have to work. But if you want to be able to retire safely and comfortably, and you want to be confident in your retirement, you want to use that money and invest it into something that's safe and stable, maybe like real estate or oil and gas. And then you just want to make sure that you have enough cash flow coming in, right? So maybe some sort of cash flow fund where you're a fractional owner of this specific asset, but you get a percentage that's paid out every single month, month after month after month. And so that becomes the cash flow that you can now live off of as an investor, or maybe somebody who's looking to retire. All right, guys, I'll catch you all on the next video.